Hello, everyone. I hope you're enjoying the day so far. Our live session today is called Deal Structuring with the Kingfish Company. It is my pleasure to welcome back Maggie Fried, who is the head of the Oceans, Seafood, and Aquaculture Investor Consortium at CREO Syndicate. Hi, Maggie. Welcome, Maggie. How are you?
I'm good. Happy to be back.
We're happy to have you. And so Maggie Fried will be interviewing Ohad Maiman, the CEO of the Kingfish Company.
Yes.
Ohad?
Yes, hi. Hello, Jen. Hello, Maggie.
Hi, Ohad. Welcome to both.
Thank you.
All right, Maggie, I think I'm going to turn it over to you.
Great. Thanks, Jean. So we will kick off the session with a video about the Kingfish Company, and then we will go from there. So Ohad, I'll turn it over to you.
All right. Here we go. I'm not aware of any other major food group where there is such a challenge in creating more, and that's where we come in. I think seafood is quite unique in the sense that when you compare it to other major food groups, it's one of the last frontiers where, as humanity, we're still figuring out how to make enough of it. With global population rising, with the understanding that seafood is a high-value protein and a healthy alternative, there is a need for more.
What we're doing in our RAS system is trying to minimize the impact we have on the environment by actually circulating the water multiple times.
The water we extract from the Oosterschelde, we filter and we clean, make sure there's no parasites whatsoever, reuse it on the farm, and then send it back after we've cleaned it again.
It's all about sustainability at Kingfish Zeeland. We want to comply with all sustainability standards like an ASC or a BAP.
These are choices we feel that both fit the character of the company, but also are the right values for our times.
A fish farm is a very innovative infrastructure, and we're growing the fish from A to Z, from the egg to the plate.
We start from hatchery, from breeders, have the hatchery process and grow them all the way to market size. But we also do processing, we do the marketing and sales ourselves. Everything is integrated.
We always go for the highest level of perfection when packing our products and delivering to clients.
Yeah, doing something everybody else does is not interesting. Being able to have these rootstock fish here, reproduce them so you're not relying on any natural resources anymore. And you can still put such a beautiful product in the market. That's the goal of Kingfish.
The technology we operate can theoretically produce as much capacity as we build.
Kingfish Main is the expansion of what we have established in the Netherlands. And for us, the biggest factor is finding that site that provides the most important thing, which is good water. And Jonesport definitely has plenty of that.
It's a logical choice. It's a massive market with very limited fish production in the US. It's a species that we believe will do extremely well there. So it's a logical choice to go to the US.
We have a young team which is very dedicated, a lot of nationalities, so a lot of backgrounds and a lot of cultures, of course.
Yeah, it is a 24/7 thing. So there's always somebody here to look after the fish.
We want to strive all together to make it better and better all the time.
It is a big challenge, but with the right people, the right technology, we're doing it.
It's an extremely versatile fish. It's a fantastic product to work with.
It can be consumed raw, half-cooked, it can go on the grill even at very high temperature, and it's always a great result.
It's not seasonal, it's absolute top quality, and all the chefs we've talked to from Michelin star, everybody is very happy to work with the fish. We've proven that the species is the right one, proven that the technology works,
it's quite rare to have the opportunity to join a new industry on the ground level. There's a benefit to the first few that establish a position. Right.
Great. Thanks for sharing that, Ohad. It's such a fantastic way to be introduced to the company, although I've heard from those who have visited the facility that it's really an incredible place. And so the video gives a bit of a snapshot, but I'm sure not the full experience of being there in person.
Thank you.
So the way that the session will be structured is that it is an opportunity for those of you in the audience to ask Ohad questions about his fundraising process. And the way that we'll structure the next 40 minutes or so is that we'll discuss his fundraising in 3 stages, early, growth, and then current fundraising. I'll kick off each of these sections with a few questions. And then for those of you who have questions that don't fit neatly into those sections, we will have an opportunity at the end to open it up to broader questions. So Ohad, starting out with your seed round or early stage fundraising, what kind of investors did you approach and why?
Well, to start in 2016, we had a site in the process of permitting and a concept to develop our first commercial scale proof of concept unit. We ended up going after pretty much friends and family. Some of them would qualify as family offices based on your definition in the previous keynote. And the reason is that that was seen as a very high risk proposition at the time of an unproven technology in a challenging sector.
And what were the characteristics of the companies you had to prove to investors in this early stage, and what concerns of theirs did you need to overcome?
To some extent, all of them. The questions were, I think if you look back at 2015, 2016, the landscape of RAS was not too encouraging. There were a handful of examples of operating farms at small scale, most of which with their own unique reasons for why it didn't work. So the challenges were quite substantial, ranging from whether our design will work, whether the product will come out in high quality, whether we can prove a market there, whether we can operate and get anywhere close to our designated output capacity.
Great. Let me pause here and open it up for questions from the audience. So question coming from Richard Hunter. For the startup, how much funding do you look for? So I take that to mean, in the early stages, how much funding were you looking for?
Well, I think it really is a case-by-case basis of what species at what market, what would constitute a proof of concept. For us at the time, we were looking to raise somewhere between 20 to 25 million euros with some debt component as well.
Mm-hmm. Great, thanks. How many investors were truly interested in the project, and how many of them went to the finals, or how many of them ultimately became investors? And that came from Gustavo.
Very few, and the ones that were willing, we went to the finals with. I think it helped me to, since RAS was, or to some extent still is, a new sector, to look at wider at other new technology developments, where often the first challenge is the question mark on the technology. There was at that time a view that it will never work, and that fish are meant to be caught wild or raised in net pens. The ones that ended up interested, I think strangely enough, we found some ex-founders of tech startups that sort of liked the idea of long shot disruption, and they were more comfortable with the odds as they perceived them.
And I guess along with that, when I'm speaking to companies, I'm always curious what they're looking for in their investors. So at that early stage, besides investors who were willing to invest, what is it that you were looking for?
Well, of course, the personal chemistry is important. These are people you will work with for a long time and not always come to them only with good news. So that was an important part, but I think generally the alignment of the vision, investors that felt that our business case made sense and were willing to take a risk and support us.
Yeah. So we have a clarification question from Richard Hunter again. When you were talking about the 20 to 25 million, was that right at the outset, or was that backup capital as the development progressed?
That was to some extent, including debt, the first major fundraising. The earlier stage of permitting, securing an option on the site, that was substantially lower and primarily by founders.
Yeah, I think, well, like you said, it really depends on the company and what they're raising and their technology. I think that's a pretty common amount to start out with while you're securing a site. And then Juan is asking, you know, at that stage, how many tons were you looking to produce?
For that, what we consider the first commercial scale pilot was designed for 520 tons per year. It is these days producing at about 670.
Yep. And then Chris is asking, I know you mentioned earlier a few of the things that investors were looking at or looking for in that early stage, but are there any other factors or more detail you can go into of what they were looking for?
Well, I think that the first big question was really a question mark on the technology, whether it at all makes sense to make such an investment and so much of an effort to grow fish on land. Next to that, or I guess the investors that saw it as a disruptive new technology or a way to produce fish, then came the question of the likelihood of our ability to deliver, whether the design made sense, whether the team there, I think it comes at the end of the day to some level of trust or the willingness of an investor to take a leap of faith that the team that is presenting to them can deliver on the plan.
Yeah. I see there's a question here from Jason. Jason, we'll get to your question a little bit further on. It's in reference to the main project, which comes a little bit later in the timeline. So let's move to the growth stage of the company, which is when I met you. When you move to what you call the second stage of fundraising, how did the characteristics of the investors who were interested, who ultimately ended up investing, how did they differ?
I think it differed by the stage of the company, meaning we were then somewhere between a proven startup to an aspiring scale up. We could show that the design works, that the product was well received in the market, but we still had some way to go on fully proving the design capacity output and the operational KPIs. That enabled what I would consider the mid stage in our evolution of investors, where it was already more professional institutional investors with somewhat of industry know-how and willingness to look at a potential scale up to some extent.
And how did that change what investors were concerned about, what they were looking for you to demonstrate at that point?
Well, then the focus was much deeper into the operational KPIs, our view on potential improvements over time, and some technical questions, I guess, as far as our development roadmap, permitting and licensing of new capacities and facilities, questions whether the price points can hold as we come out with more output. But these were already less of the all or nothing type of questions.
Yeah. And Jason also asks, have any of the recent setbacks experienced by other RAS producers led to challenging questions from some of your investors? If so, what kind of questions did you get asked? And then I'll add to that, how did you negate those concerns or questions?
Well, I think to some extent, the sector is still in its early stages. So any major challenge of one operator reflects on everyone. I think at the end of the day, we've pointed out to our track record where we do believe that in the trade-off between investment and reliability of the system, we are strong believers in the reliability even at a higher cost. And I guess the best way to answer it is to show continuous production without major mortalities or issues.
Yeah. And a question from Mark. So as we know, in the second stage, that's when Nutreco came in. And so Mark would like to know, do you see vertical integration as an important factor into your partnerships and development? And he gives the example of Nutreco and Kingfish.
So for us, Nutreco was an important partner as far as supporting or proof of concept from an investment case basis due to their deep knowledge in the sector. And of course, the opportunity to work and conduct R&D on improving feeds has been a plus. I think maybe vertical integration, I think more from our operational standpoint, where we are fully vertically integrated from the full cycle hatchery through construction, supervision, implementation, production, all the way to packing, processing, and sales and marketing. And there, I think it's important to differentiate between what is the core of your activity, which in our case is, as we see it, the RAS technology, the ability to design, deploy, and operate, and what are often necessities. We had to go into advanced processing because our volumes were too small for other processors to make room for us. But as we grow, we are happy to hand off processing to more professional third parties at times. And I might have gone through from the investor side to general vertical integration. As far as the investors go, I think it really depends on what you consider the important factors for your growth. For us, feed and know-how in the industry was important, and Nutreco fit there well, but also ongoing fundraising needs where Rabo corporate investments coming in was a critical addition.
Well, and just to build on that, so your decision to vertically integrate, it requires more capital, but of course can have financial and quality benefits. And it sounds like that decision was more driven by the fact that you were small and you weren't able to, work with other processors like you mentioned before because of your size. Is that correct, or was it a bit of kind of both pieces?
I think it depends. I mean, when I think about the starting point for us is the full cycle hatchery, which in our species is quite a barrier to entry or a moat. So that one was the first development. We started basically a year before construction, already setting up the hatchery, and that is an aspect we envision that we will continue to maintain. Processing, well, initial packing from harvest will be required, but advanced high-spec processing is an element we are happy to hand off to third parties when it makes sense. And marketing and sales is a bit of a strategic decision of a company. We soon could have had on an offtake with a single or a few suppliers, but due to our need to control the development of the market and facilitate very, I would say, demanding clientele, it was important for us to keep control of branding and of the sales activity.
Mm-hmm. And during this second growth stage, what was the operational capacity? I know you and I discussed this before, but that you were one targeting and two ultimately ended up hitting.
So I think that was around 2019.
where if I recall, we were running at around 450 ton or 430 tons against a 520 ton design target. That is where we needed to show a clear road towards meeting these targets. That situation progressively changed, and towards the end of 2019 and then early 2020, we have been able to meet and then exceed the design level. And that, of course, makes life a bit easier when projecting future output.
And moving into this last stage and the current stage you're in, what was your fundraising strategy after that point when you started to seek more capital? If you're expanding to the US, what did that look like?
Yes, I think that in parallel with the comfort we felt with our ability to produce, we were able to make a more convincing case to investors that it is more of a need of growth capital for a scale up than a risk profile of a startup. So I would say then the focus shifted more towards the business case, the choice of species, the choice of market, the strategy of deployment.
And we have a question from Richard again. Love all the questions, Richard. Thank you. So when you started, what was the initial market that you were targeting, and then how has that evolved over time?
Well, I guess overall we were targeting the European market with the facility in the Netherlands. I think that is still an important built-in benefit of the technology in my view. And we did early on made the decision of allocating between 10 to 20% of our volumes to the US market, but purely as an exploratory effort to verify whether the US market makes sense as our next step of development. So the focus was the EU. As far as the subsegments of the market within it, in our case, the species has three addressable markets. The natural or more familiar ones are from the sushi sashimi culinary tradition for raw use, as well as the Italian cuisine, where it is used more center plate, grilled, and versatile preparations. But what we found was a third addressable market, which are the high-end premium retail that have not used this species much before, but were quite welcoming to the sustainability credentials and efforts and local production, and looking to add additional premium species next to Chilean sea bass in the US or halibut in Europe.
And Ohad, when you talk about going from 2019 into 2020, can you talk a little bit about how COVID impacted you and how you may have shifted your business model, if any, and whether that also impacted your ability to fundraise?
Sure. Remember early 2020, I think it was January or February, I presented a 3-year marketing and sales plan to the board. And then in April, I asked them to read it backwards, because essentially we were planning to continue to focus on food service in 2020 and slowly look into retail. And that was turned on its head. For us, it ended up being quite a challenging year, but overall, I guess it's part luck and part preparation. We were already in the process of preparing for retail. So some of the long lead, the audit of Whole Foods, we started almost a year before the pandemic hit, and then we were able to complete the audit in April or May of 2020. So some early preparation enabled us to pivot quite fast, and overall finish 2020 by maintaining the 2019 sales volumes and price points, but with a major shift in target markets to retail from food service, obviously.
Yeah, I remember talking to you in April of 2020, and the whole industry was just scrambling, and because of the work you had done, you were just in such a good place. So it was pretty incredible. Chris is asking, when you're going from this point of a small scale technology and operation that's been proven, and you're going to larger scale production, how do you ensure the success of technology and biology at this larger scale, such as larger tanks, more water to be treated, especially the comfortable environment for the biomass?
Yeah. Well, in our case, we try to not change much in the design, seeing that we feel it works. So we do aspire towards the copy-paste concept of additional modules of the same size. Of course, the overall scale of the operation poses wider challenges of an organization growing and the ability to maintain the same or improve the level of management as we scale up. These have been, I think, major challenges we have put extra attention to, as to how we grow the organization and make sure that we continue to train additional production personnel and shift managers that since our production manager can no longer sleep on the farm every night in both farms. Yeah.
And since there is a history of companies not being able to scale and get kind of past that pilot phase to a larger scale, was there a certain point where you saw more investor anxiety as you started to scale?
I think one of our investors pointed out to us that late 2019, a scale-up, something called Scale Up Nation in the Netherlands, which was a specific program for companies going from a startup to a scale-up phase. And I think it was quite an opportune moment for us to go through this workshop. It pointed out to us, for me personally, it meant internalizing that I need to delegate and build a team and no longer be able to be present at every meeting I deemed important. So I think it's something to be taken seriously and consciously, but there's already methodology around it and companies that have done it successfully. So it is doable.
Yeah, it's not just about scaling the number of tanks, also about scaling the team and the company more broadly. Yeah. So, if you look back on big things that happened last year, having to deal with COVID, and then a more positive one perhaps is going public. So can you talk a bit about the decision to go public and what that was like?
Yes, I think it was primarily driven by funding efficiency. Essentially, we looked at various options, convertible notes and private placements, and we found at the time that a combination of, I would say, market mood and the focus of the Oslo Stock Exchange and the Norwegian market on seafood made it quite welcoming to our case at the time. And yeah, it was more about the efficiency of capital raising than specifically the desire to be or not to be a publicly listed company.
Mm-hmm. And then looking to another type of capital, what were your options for debt financing and how did that impact your fundraising strategy?
Debt funding is quite a challenge in RAS. We are, I think, as a sector, still not at a place where real estate is or any other mature sector where you can count on financing, but it is needed for growth. I think our experience in 2016, I think I approached 17 or 19 banks, and the only ones that were willing to fund us were Rabobank. And without it, I'm not sure we would have been able to set up the first unit. So I think that overall, I hope that 40-50% debt to equity ratio will become more of a norm by banks and lending institutions feeling comfortable with the technology.
Yeah, what do you think will help them get more comfortable? Just more time, more successes in scaling, or is there anything else that you see them really looking for that can help move that forward?
I think it's primarily the maturity of the sector and comfort with the expectation that a new facility will operate somewhere close to the intended capacities.
Yeah. So speaking of new facilities, there's been a few questions about your expansion to the U.S. Lots of excitement there. So can you talk a bit about when you expect to operate in the U.S. and how many tons you expect to have at that point.
Sure. So we already have 5 full-time employees and a running hatchery in Franklin, rented at the CCAR facility, where we have started larval rearing runs with brood stocking preparation of stocking the farm. The permitting of the site in Jonesport has been going for about a year now. And this, to some extent, is the key question on timing. If all goes well with permitting, we've indicated the possibility of starting groundworks as early as the end of this year or early next year, but that remains to be seen as far as permitting and financing goes.
And did investors see, were they concerned about the risk of permitting or social license when you moved to the US, given that some aspects of that have been challenging for others in the past?
Yes, I think that is a fair concern. It's not a given that a permitting process will result successfully, but it depends on looking at the different elements. For us, the first important question that we raised to the local regulators in late 2018 was to make sure that the parameters of our suggested intake discharge water composition based on our Netherlands operation would fit within the guidelines or requirements from an environmental perspective. Once we were comfortable that it did, and we were quite comfortable from the technical aspect, the next question that is as important, or at times more, is of course the social license. And that impacted both our choice of site, where when we finished our initial site search, the big question beyond the technical parameters was to find a location and a community that wants us there. We conducted several town hall meetings and met the local councilmen, and only when we felt comfortable that the community in Jonesport wants us there as much as we want to be there, we made the final decision. And I think that's a very important aspect in each step of our permitting. Before submitting our permits and design, we've had additional open town halls where we presented our plans. We received feedback that at times changed some parameters in our design according to the feedback from the local community. And I think it's a very important dialogue to maintain to assure the permitting can succeed.
Absolutely. So we have a question from Joe about the design of the systems. So do you think the use of hybrid design systems rather than one singular design is advantageous or risky? And I'll just, while you're thinking about that, I'll open it up to broader questions after this. So please feel free to put them in the chat.
Sure, but just to make sure I understand, when we're thinking hybrid, would that be flow through? I'm not sure I understand the hybrid term here.
Well, Joe, I'll give you a minute to put some clarifying thoughts in the chat, and we can come back to that. Gustavo is asking, was the design a key factor on getting funded?
It is now, meaning when we started, it was part of the question marks on whether the design would work, and there was a chance it will. I think that now that we can show the productivity numbers, then yeah, it de-risks that question. Oh, Joe, I think this is a question for Case on fixed bed versus moving bed. Yeah, I should not opine technically there.
Okay. So I'm curious whether you think the fundraising environment is different now for earlier stage companies than when you started out, having you and some others who have served as proof points. Do you think it's getting easier or still just as challenging?
It seems from the side like it is getting substantially easier. I think when we started in 2015, at least my initial thought was to go bigger, and I had quite a few friendly investors that told me first build a small unit and show us it works, and then the sky is the limit. I think it's often the case that it's positive overall that some early mover proof of concepts have dispelled some of the concerns or have enabled the view that the technology is already proven. I think what's important to then consider both from the entrepreneurs and from the investors' perspective is how was it that Rumsfeld called it, the known unknowns or the unknown knowns of there will be, it is, at least in my view, not yet a plug and play. It requires a learning curve that once you do it the second, third, and fourth time and larger, you will still encounter some unforeseen challenges, but less and less of them as you go along.
And looking back over your whole process, what do you think was the most challenging investor concern to address?
Cost overruns and delays. I think there's a natural tendency for entrepreneurs, and myself included, to tend to the minimum required capital for the minimum associated dilution. I think it's important to at least be on the same page with investors that there is a best case, a base case, and a worst case scenario to prepare for. And while it is, I wouldn't recommend funding double what you expect you would need, but 10% buffer can easily be overshot. I think it's important to be on the same page with investors that this is the plan, but what happens if there are substantial delays? There were a few times where we had our back against the wall in the early stages, and that's not a comfortable feeling.
Yeah, I mean, I guess we've talked about the technical piece of getting that right and proving to investors that you can get that right. But then on the other side, we've seen a number of companies fail because they haven't managed their cash flow and they've burned through it too quickly. So, how do you prove that to investors that you're able to kind of stay within or not burn through the capital too quickly?
Well, I think part is by working closely with your investors and board so that you minimize surprises and take them along the journey with you. I'm not sure how that would be viewed from a early stage investor if you opened up the discussion of what happens if it costs double. But it is a worthwhile discussion to have so that it is, the first proof of concept is an open question. It can work, hopefully as planned, and there could be additional surprises, additional filtration needs, or unintended results from site selection that require additional capital. I mean, I think that overall I feel comfortable that the technology is proven, but what it takes to get there and maintain it takes some discovery.
Yeah, and I think that also goes back to what we were talking about earlier of what it is that you're looking for in your investors, and being able to have those kinds of conversations. Seems like that's critical. Gustavo was asking, what would you say in your particular case were the key factors that got you funded? And it may be earlier stage, I would guess is different than later stage, so you could probably break those up.
I think that on the early stage, it relied much more on the comfort of investors with the team, with management. In our case, Kees Kloet, my co-founder and the actual RAS expert in the group, has been doing RAS for 30 years, and about 7 or 8 years before we started the Kingfish company, he started the first pilot programs for Kingfish Yellowtail, and it was able to prove he's able to grow them. As it goes on from there, I think that it leans more towards the business case. I've seen some cases where a RAS project is proposed for a location and a species, which I do not understand. I think that the choice of location and species is critical to make a business case for to operate and develop a RAS company.
Yeah, absolutely. So I'll just, before I go to my final questions, I'll just remind the audience that we have about 3 minutes left. So if you have any final questions that you're dying to ask Ohad, make sure you get them in the chat. So Ohad, looking back, is there anything that you would have done differently in your fundraising process?
I think those early seed investor conversations on what happens if we need more capital, because we did.
And when you say those early conversations, having more of them, really making sure that those seed investors were comfortable when that happened.
Yes, I mean, again, I think that it's a delicate balance because the business plan should be achieved. But when you are in the early stages of an unproven design and species and sector, then I think it's worthwhile thinking of setting up the base case, but also having a mechanism in place that if it takes an extra year, if it takes an extra budget, then if possible to have these conversations ahead of time of what would be the valuation or the additional dilution based on additional capital required, that in my experience would have reduced quite substantially the early days or challenges.
Yeah, absolutely. Are there any final questions from the audience? And while we're waiting for those, I'll just ask, what advice would you give to companies that are out fundraising right now, perhaps in their earlier stages? It sounds like having those conversations, those difficult conversations around what does it look like if we need more time and more money, but any other things that you would recommend?
I think to think long and hard on the business case, because there is a tendency to misunderstand early stage technologies. RAS has often been touted as a technology to raise any fish anywhere, and while that may be technically true, it doesn't necessarily make a sound business case. So that is quite an important decision. And then to make sure you have the right know-how in management and where needed in advisors. But it's still, I would say it's important to respect the stage of development the technology is in. It is far more advanced than it was 5 years ago, but it is not yet dummy proof, let's put it that way.
So we'll take the last question from Matt. Ohad, you focused more on the end consumer than the projects targeting chefs and organizing tasting sessions. And Matt saying that he hasn't seen that with some of the other startups in the space. How important do you think that was?
I think that it's a bit of the difference of if your goal is to build a farm or to build a seafood company based on RAS technology. Meaning that I've seen successful approaches, or at least potentially successful ones, where yes, you can operate and more as an almost contract farm, or buy eggs or fingerlings, have an offtake of sales, and that in itself can be an interesting business. For us, I think 5 years ago, we walked into banks and investors and told them that we think that in 3 to 5 years, there will be 3 to 5 sector leaders that prove that it works, and we want to be one of them. I believe that today that is where RAS is, and then the next challenge is the race to scale of seeing who would be the ones building enough of a leadership position in size in the relevant markets before the technology, like any other technology, becomes more readily available.
Great. Well, Ohad, I look forward to following the progress of the Kingfish company. Always great to hear from you. Jean, I'll turn it back over to you to wrap us up.
Thanks a lot, Maggie.
Thanks, Maggie. Thank you to Maggie Fried and Ohad Maiman for an insightful session. I'm sure I speak for the audience in saying we've learned a lot from this conversation, so thank you to you both. We will now go on a 30-minute trade show and networking break. Don't forget to check out our sponsored content and our exhibitors' booths. We will return for our last live session of the day, the RAS Producers Panel. See you then.